Oh, we're live. Hi, Sharla. Welcome to Venture with Grace.
Thanks, Grace. Thanks for having me on.
To start the show, I would love for the audience to get to know you a little bit more. So, prior to Serena Ventures, you work at Greycroft, and then before that, you work at Uber, and then you started your career at MIA. Why don't we start with, what are some core lessons you've learned early on in your career that kind of shape you into who you are today?
Yeah, so to start out, my first job out of college after I graduated Dartmouth
Mhm,
was at Altman Vilandrie, which is a
mhm,
strategy consulting firm where I solely focused on projects where our clients were private equity firms looking at
mhm,
evaluating later stage TMT buyouts. I
mhm,
think what was really important about that role for me is really just learning how to analyze companies
mhm,
and also really being able to think holistically about TMT, not just in the earlier stages of fund technology, the way we tend to focus at the earliest stages at Serena Ventures, but really understanding the full life cycle and what eventual
mhm,
exits look like for businesses and what later stage private equity or public market investors are looking at when they're making decisions.
mhm,
So from there, I pretty quickly realized that I wanted to get some operating experience, and Uber was a really fun place to be
mhm,
in those days. I think for me as an investor now, it's really great to have had that um, really fast moving, albeit brief operating experience, because I think
mhm,
there's several challenges that I saw firsthand at Uber thinking about how should we build a CSR team? How should we think about pricing? How should we think about really measuring our marketplace efficiency that are still relevant as I look at companies today? But I think really the most important and most relevant thing I took from both roles were really just my network.
mhm,
I worked with incredibly talented and smart people at both companies that really many of those folks went on to be investors themselves. Many went on to be entrepreneurs and start venture backed tech companies. And all of those relationships just keep paying dividends as we all progress in our careers.
mm. I wonder, so when you, I guess, like, I really like what you said about, like, learning about the full life cycle and then maybe thinking about, like, that, I guess, like, that help you, like, learn about like exits and then also like gaining operational experience. Why don't we talk about, like, I guess, like, maybe we could start with, Serena Ventures. So, like, I feel like it's such a unique place because it's like associated with, one of the greatest like influencer athletes and icons of our generation. Maybe we could give the audience a little bit overview on Serena Ventures, and then we can dive deeper into investing and personal development.
Yeah, I'm happy to. So at Serena Ventures, our thesis is really investing at the intersection of technology,
Mhm,
innovation, and societal progress. So we really look to back bold founders building high impact companies that are driving change in some respect. So
mhm,
whether it's solving challenges in the healthcare or financial industries, reimagining other legacy industries, or unlocking opportunities for underserved communities, whether it's consumers or SMBs.
mhm,
Um, we really have a relatively broad thesis, but every business we look to back really leverages shifts in behavior and global trends.
mhm,
More tactically, we are typically investing at the seed and Series A. We invest up to $5 million, and we typically are relatively flexible on ownership, meaning we're not a 20% or bust type of
mhm,
firm. That said, when we meet founders and really are excited to back them, of course, we want to buy up as much as we possibly can.
mhm. Totally. I wonder, so, like, I mean, when I look at the profile, like, when I look at the profile of, like, Serena Ventures, like, past, like, portfolio companies, there's, like, a very diverse, range of companies. There is, like, Daily Harvest, Mercury, Tono, Liquid IV, Isuzu. I don't know if I've pronounced it right,
That's
but
right.
why don't we talk about, like, I guess, like, how do you think about what to invest in? Like, I know that you guys have like a really broad sector. So, for example, like wellness or health or like fintech. And how do you think about like what not to invest in? Since, like, I feel like this is such a really, like, diverse portfolio. Sometimes, like, when you look at, like, 5,000 deals, anything is possible. I guess, like, is there like any a general filter that you feel like you would try to avoid? And what are something that you would like, I guess, like emphasize in? Do you have like a, I guess, mental roadmap on like, here's like a thesis on XYZ, and then that's what we're going after?
Yeah, so maybe I'll start with the last part of the question and
Mhm.
then maybe remind me the first part if I
Yeah,
forget
yeah, yeah,
to touch on
totally.
it.
Sorry about that. Yeah.
But I would say broadly, the buckets that we're looking at and get really excited about now and have strong theses in. One is we're spending a lot of time thinking about the future of consumer
Mhm.
entertainment and media, whether that's new professional sports leagues or whether that's the ability for companies to spin up using AI
Mhm.
short form video content that is much less costly to produce and much easier to push out. We're spending a lot of time thinking about e-commerce and e-commerce enablement, particularly with an eye towards sustainability, sustainable supply trends, and supply chains, which obviously are very relevant as consumers think about evaluating the companies that they shop for, but also from a B2B standpoint, a lot of the businesses we look at are not only unlocking sustainable initiatives, but also
Mhm.
unlocking better unit economics for their customers.
Mhm.
We continue to have a strong belief that a lot of the administrative spend in the healthcare industry can and should be automated, and now is the best time to do so, given step change in technology, but also an appetite for buyers on the payer and provider side to look at these technologies. And the last thing I would say is we continue to be excited about consumer products, and this
Mhm.
might be one area that some of our peers have stepped away from, but we think particularly with an eye toward consumer trends. For example, our recent investment in Cloud, which is high protein popcorn, really fits into
Mhm.
this idea of consumers who are increasingly educated, increasingly know what they want from products that they are buying or serving to their family or serving to themselves. And we think
Mhm.
that there's actually been a lot of really interesting outcomes in the space. So hopefully we'll see more at the early stage as well.
For sure. I wonder, since you mentioned like, the valuation may not be like the benchmark that you guys are super sensitive about, like why don't we talk about like what's a typical check size, and then how does like the portfolio construction look like since you guys invest in seed and series A? And how do you think about like follow on as well?
Sorry, what was the last part?
So like the portfolio construction and then the check size of the company, since like I guess valuation isn't the big thing that you guys focus on, like since you guys invest in seed and series A, how do you think about follow on?
Oh, got it. So we tend to keep about roughly half of our fund back for follow-on. So our goal is to have healthy reserves to continue to support
Mm-hmm.
our businesses. So Azuzu that you mentioned a few minutes ago is an example of a business where we invested early and then we're able to continue investing as the business continued to raise its subsequent rounds of financing.
Hmm.
Um, I will say, we definitely are somewhat valuation sensitive. I think
Hmm.
we aim for 5-8% plus. In many cases, we are getting 10 or 15% ownership. And particularly in some of our categories, again, to go back to consumer products as one, although that is, just part of our portfolio, but
Hmm.
particularly with those businesses, I think we think a lot about what the entry valuation is with an eye
Hmm.
toward what the business will have to grow into,
Hmm.
and their use of capital and what they'll be able to prove out by the time they're raising a subsequent round. In other cases, I think there are certain sectors where there's been enough comps that it's
Hmm.
relatively easy to understand what else has gotten funded, what's exited, what the general revenue multiples look like. But as you know, at the early stage, particularly the seed and the A, it's often a function of more art than science and really backing into the total round size and then mapping out from there what we think the reasonable next round will look like.
Totally. I wonder, so like when a company come to you, since like I feel like Serena is like a very big, like iconic um I guess like a founder and athletes, like how do you guys typically work with the portfolio companies that you back? So since I know that wellness or let's say the protein popcorn, everything is like kind of related to health. So there's like, I guess there is some angle to that. Maybe Serena has like a fan base in that category. Or how do you guys think about like when you partner with especially like a fintech company or any type of like company that's like have no direct correlation with the, existing brand image and just curious about like how does it tied up to like the fund investing as well?
Yeah, I think it's a great question. And when Serena was interviewed as part of the Time 100 this year, she had a really good
Mhm.
quote about this where she mentioned that often prospective portfolio companies see her value and our value as a firm as Serena being able to share out a post to her 18
Mhm.
million Instagram followers.
Mhm.
So I think that part is obviously such a unique value add, particularly for consumer facing or marketplace or B2B2C companies.
Mhm.
I think what's less well understood and definitely equally, if not more important, and Serena mentioned this in her interview with Time, is her ability and really our ability as a team to unlock different doors based on introductions to companies where we have relationships. So this really
Mhm.
spans the Fortune 500. All of us, and in particular, companies that are selling into different healthcare organizations
Mhm.
or e-commerce organizations or distributors or really any sort of companies really
Mhm.
leverage our team to make those tailored introductions for business development, partnership
Mhm.
conversations, in many cases, recruiting
Mhm.
or operational expertise. And I think that's it's probably a less well known part
Mhm.
of what doors Serena's personal brand can unlock for us.
For sure. I definitely feel like that's such a strong angle to it. Quickly shout out to some of our audience who comments. Hi, Hamza. So I wonder when you're thinking about like I guess like so for example, like you mentioned about like there is partnership area that maybe Serena can help to unlock. And how do you guys like I guess like formulate these kind of partnership and relationships? So for example, let's say when you invest in a company, I guess like do you guys have like a I'm sure you have a team, but like how does a team structure to kind of like categorize all the relationship that could be built for the company? And then when you're negotiating with the founders, like I'm sure like the um ownership also is like kind of can be negotiated by how much value you could bring to the team. How do you kind of like formulate that into a pitch to or like some sort of like tangible outcome to like make sure the founder understand the value beyond having a great like public figure to invest in the company?
Yeah, so um, starting with the first part, we're
Mhm.
definitely a small and collaborative team. So, one thing that's great for our portfolio companies is we're constantly sitting together or virtually sitting together discussing what we're hearing from portfolio companies, different ideas we have, different programs, introductions, things that we think that they should and could leverage. And we're a small and nimble enough team that everyone is really able to put those ideas into action instead of running them through, several months of meetings
Mhm.
or something like that.
Mhm.
In terms of how that translates to our ability to win allocation in competitive investment rounds, I think that really just comes back to really us hopefully continuing to prove out our value and always offering potential founders direct references and connecting
Mhm.
them with folks that we have worked with so they can really hear for themselves. I think
Mhm.
also, in many cases, we are co-leading around or investing behind another lead, or if
Mhm.
we're leading, we're bringing in other investors, and hopefully we can work with those folks to really make sure that we are all
Mhm.
thinking about different ways we can add value to portfolio companies across the investor pool, and
Mhm.
hopefully our potential founders where we're trying to win an investment are also hearing good things about us from
Mhm.
other investors that have worked with us in that
Mhm.
fashion.
For sure. I wonder, so like, I guess like since we were just talking about like, the popcorn company, I feel like that's such a interesting, company. So like, I wonder when it comes to like sourcing, diligencing to thinking about exit, like maybe we don't have to talk about specific exits, just how you think about it when you invest. Maybe can you walk us through like a deal that you guys have invested in at Serena Ventures and at the beginning, how do you encounter the founder to how do you kind of evaluate to get the deal done?
Yeah, so at a high level, I would say even though we're a small team,
Mhm,
we just calculated this morning for a
mhm,
presentation. We have 50 plus years of early stage venture capital
mhm,
experience. And I think, as you know, a big part of that is really just building relationships with people along the way.
mhm,
So most of the companies that we're lucky enough to meet at an early stage, we're introduced
mhm,
to from another fund or another founder, whether in our portfolio or in a prior portfolio, or someone that we've worked with, or the friend of someone we've worked with.
mhm,
But in
mhm,
many cases, we're also hearing about interesting companies, meeting companies at events or panels, or doing our own research about spaces and trying
mhm,
to find founders that maybe aren't on the coasts or aren't on
mhm,
other people's market maps on
mhm,
LinkedIn or anything like that. So
mhm,
I would say there's definitely um, an attempt to, within our categories, just make sure that we are meeting great people. And
mhm,
then from there, our approach is very similar to other venture capital firms, if not identical. Obviously, we want to spend time with the extended founding team, understand the data room, and that
mhm,
depending on the stage and type of business will vary in terms of what analysis and benchmarking we like to do. In
mhm,
terms of getting the deal done, the last step in our process is having really the company meet with the full partnership team, or at least several of our partners, and from there we move to a final decision.
mm. I wonder, so like I guess like since in your time at Greycroft that you were looking at a lot of like health and wellness companies, and maybe we could talk about like in that space, like what are something that if there's like any interesting trends that you're seeing in the space in the health and wellness space.
Yeah, sure. So I think one thing that is really interesting, and we're talking through actively here,
Mhm,
is um, what categories still make sense in terms of a consumer wellness model. Meaning, for many years, I think probably starting in 2020 or 2021, I really stayed away from anything that was consumer facing in
mhm,
healthcare, and I would put wellness in a separate category.
mhm,
And in the healthcare bucket, I would talk about many things that are cash pay or voluntary, and really my focus was around mostly B2B, in some cases AI driven, but really all
mhm,
more on the software or data side of healthcare. I think one thing we're seeing in the past few quarters is a lot of businesses that are consumer facing and really are more longevity or functional medicine focused.
mhm,
So it's an interesting trend that in some way bucks many of the earlier generation of D2C healthcare businesses
mhm,
that were not medically necessary and were not covered by payers, so insurance companies or
mhm,
public insurance. And I think we're interested to see where those businesses land, and we think it's a really interesting
mhm,
movement that's here to stay, and how
mhm.
people think about what's important to them as they evaluate the root causes of their health.
Mm, I wonder, so I feel like there's a lot of companies in New York are like, or like a lot of funds in New York are really focusing on like healthcare compared to Silicon Valley. So how do you like what do you think make New York such a interesting place for the healthcare company to like start there?
Yeah, it's a great question.
I don't know if you see the same because
Yeah,
yeah.
I think it's probably accurate to say. I think perhaps the existence in New York of several great healthcare companies, Oscar, Flatiron Health, et cetera, threw off other founders. Um, there's also just many healthcare incumbents in the tri-state area, large pharma companies, payers, large self-insured employers, et cetera. which likely made it easy for folks located here to go get quick customer feedback. We have many large health systems, but I also don't think that's necessarily unique to New York, that last point. So I think for us, I mean, healthcare is probably around a quarter of our focus at this point. And we do continue to meet so many phenomenal healthcare founders in New York, but also all around the country as well.
Mm. I love that. So basically there's like a lot of like healthcare startup that started in New York already. So there's like a lot of, I guess, alumni from the company to like start more companies in the city. And I wonder when it comes to like, the, I guess, valuation between like a healthcare company and like a pure consumer company, they're probably really different. How do you think about like allocating investments into these like different subsectors? Do you have, let's say, let's say call it like 30% healthcare deal, but like 30% consumer and 30% fintech? Or like how do you think about the, I guess, the portfolio, I wouldn't say portfolio construction, but I guess like the portfolio sector that you kind of like emphasize your time and energy to? By the way, hi, Gwen, like saying hi to some audience. But yeah.
I think it's a great question. I don't think we really have a perfectly organized answer to it, but I will say that we definitely think about our focus areas and things that fit into the broader thesis that I shared at the beginning of the call. And we have a broad sense of how we want that to break down across industries. But as you know, things change so quickly, both in terms of the actual companies we're meeting, the size of investments we can make in those businesses. And in some cases, really interesting things pop out of the woodwork where we know it's an investment we want to make, and we certainly are not beholden to a framework that says, oh, well, we've already made 4 of these type investments out of this fund. So I think that flexibility is really important for us to retain as we think about just finding the best companies to invest in.
For sure. What are some, since you guys are really like investing in a diverse set of founders, like what are some opportunities that you feel like are overlooked by the mainstream investment community? And yeah, just curious.
Yeah, so one, I think that this is probably well known now, but because we are largely based in New York and have several team members who are remote, I think we just have a better opportunity to meet folks all around the country. I wouldn't say we're unique in this, but I think oftentimes if you're sitting in San Francisco or you're all sitting in New York, sometimes it's difficult to go seek out those folks in other pockets of the country or the world, or try to figure out how to break into those communities. But we have portfolio companies in various countries and all across the country, and it's interesting. For example, we have a portfolio company in Salt Lake City, and through that, we've gotten to know some of the local angels and other local operators in that community that are building really interesting businesses. And I think, if we continue to see really interesting opportunity that might still be overlooked, even in the world of Zoom and remote meetings.
I wonder for the Salt Lake City company, so like how do you think about the geographic companies that are like popping up? So I've seen like, I feel like because I live in Silicon Valley, most investors who are local just invest here. But when I go to like New York City or just like anywhere, I travel to like Texas this year, and I feel like a lot of the sub community, they also have like really strong local ecosystem. Like I wonder, since you mentioned Salt Lake City, so like what does the ecosystem kind of like look like in Salt Lake City or like any other kind of pocket of the country? And what are some like innovation? Are everybody just building like AI companies, or like what are people innovating on?
Yeah, I think it's a great question. I wish I had enough of a perspective of an answer for various different pockets, but what I will say is just anecdotally, I think across my 8 years of investing, I have noticed that founders outside of the coasts often tend to have, in some cases, a little bit more experience in the industry that they're building in, whether it's someone who came from the industrials industry building a software for industrial customers, or someone who has built and scaled to bootstrapped SMBs and now is building the tools they wish they had, and that there can be a venture-backed platform. I think often it just skews a little bit more experienced, which is often just an interesting archetype and a little bit different, perhaps, than Silicon Valley.
For sure. Are you, I guess, oh, by the way, hi, Charles. Charles was asking, what are your thoughts on investing in insurtech?
It's not a category where I've spent a tremendous amount of time. We've seen some interesting businesses, particularly as it intersects with healthcare, obviously. I think one trend we're following closely is ICRAs and a lot of macro moves toward that instrument and how it intersects with consumer decision making about their healthcare spend. But I wouldn't say I'm an insurtech expert with specific thoughts.
I feel like insurtech is such a niche area that it really need the people with industry experience to kind of understand a lot of the nuance towards the insurance industry. And I just I've only seen a few fonts that are actually focusing on this. So I definitely feel like it's a very interesting sector. But okay, let's talk about AI. So I feel like maybe we start with how do you leverage AI as an investor every day? And then maybe we can talk about AI investing trends later.
Yeah, so I think we still have a lot of work to do internally, and this is on our roadmap with the team for the summer. We discussed it and figuring out how we should be utilizing it better from an operational standpoint. So everything from really tracking the data that we're collecting across our portfolio, or how we're thinking about benchmarking potential new investments. All of us utilize various different note takers and different research tools, but I think that we have a lot of work to do and a lot of learning to do as a firm to make sure that we're up on the best practices and not all, kind of reinventing the wheel ourselves. So it's definitely on the roadmap for this summer. I would say from a sourcing perspective, the vast majority of our meetings are still warm introductions, as I discussed, but we're definitely hearing increasingly from peers the value of tools that help to surface really interesting companies and more importantly, really interesting founders, perhaps earlier than we would even know to ask for an introduction.
What would be the things that you would focus on? So for example, obviously I feel like living in Silicon Valley, everyone's whenever someone changed their title to stealth and then they have work at the, usual suspect, 5 companies like OpenAI or something. So what are some benchmarks that you are using to kind of signal this is a really interesting company?
You mean at the seed stage?
Yeah, at a C stage or maybe even Series A, obviously if a well-known investor who are specialized in a category recommendation, that's definitely a plus. But I guess when it comes to, since I'm sure you guys got a lot of inbound deal flow as well. So how do you quickly, I guess, filter out the, 95% company that probably don't matter?
Yeah, so I think you really hit the nail on the head, really understanding the background of the founder. I would say less so just making sure that they've worked at a company, although of course that's relevant, but really understanding what did they achieve in their past? Are they someone who was considered a leader and a good potential CEO? Would they be able to hire a strong executive team around them? Are they really astute at steering a ship, moving from perhaps an IC role to CEO of a company? For us also, from there, I would really break it down by sector. So I think each sector we look at, we have some specific opinions about what we would need to see. So for example, if we're looking at an early stage healthcare business, in many cases, we understand that if that business at an early stage has 3 pilots, that means something very different in healthcare because of how long sales cycles are and how often that is the first entry point to build traction that then converts to full revenue. Whereas for something that is leveraging more of a viral growth story, we would want to see that much earlier and understand the different inputs there. But for us, I would say the most important thing, other than team at the early stage, is really understanding how the business gets to, $1 billion plus outcome, and really being able to make sure that we can tell ourselves a story around market size, the different unlocks in the business, margin, all the basic things to make sure that even if the business never makes it to that type of exit, we feel comfortable that they have a shot.
For sure. I guess how would you imagine so let's say since a lot of the founders are listening to the podcast and then they probably wanted to pitch you guys and how would you suggest the founders to think about fundraising? So some of the investors are thinking maybe batch all your not investors, but I guess the investors suggest the founders to, batch all the calls within 2 months, and then you just go back to back to try to talk to as many investors as possible. Or some of them are leaning towards tailored approach. So for example, why, Serena is the best investor, or Serena Venture as a whole is the best investor for this team. And how, I guess how do you also how would you suggest the founders to put in a deck, or does a deck matters? I feel like I got this question a lot from the audience.
Yeah, so I definitely wouldn't recommend talking to every investor under the sun. I think obviously raising capital is a huge part of founders' work, but they also need to continue to focus on the business at some point and get back to building. So I think, of course, it takes most people dozens and dozens of meetings in order to find the right investor for their business. So I don't want to minimize that, but I do think it's worth some upfront research to answer a few questions. So the most obvious is making sure a firm still has capital to deploy and is actively investing at your stage and at your sector. I think often founders will reach out to firms where the firm's website clearly says we are a fintech growth fund, and they are a healthcare I think, and that's an extreme example, but sometimes I think founders end up in an email chain trying to convince an investor that their company should be the exception to the rule. And I just think that's a waste of time. If you can clearly see on a VC's website that they have absolutely no interest in the type of business you're building, you're really not going to be the exception to the rule. There's some reason from a thesis or LP standpoint why they've chosen the sector or stage that they have. In terms of deck, I think I always find it helpful to see a deck. People are different types of communicators, and I think some people prefer to write a memo, which is often very helpful as well. I think as an investor, I don't have a strong opinion. I would say whatever allows a founding team to feel like they can get their thoughts across most clearly is, I think most investors are willing to review.
I wonder, this may be getting into a lot of details, but I feel like a lot of the founders are actually still really curious about what investor thinks. So for example, when people putting on TAM on a deck, how should they think about it? So some of the TAM are just ridiculous. It's the Google size of TAM. So obviously in the end of the day, I mean, if your company is amazing and then maybe everyone is using it, but I guess how do you suggest a founder, how do you basically express the market is big on a deck? And then on the deck, obviously some people put the team at the beginning or some people put team at the end. Is there any kind of deck that you prefer to see, following what kind of thought structure?
I think in general, the earlier the traction, the earlier in the deck the team slide should be. Because if there's little traction, that's what you're really investing in and that's what you're leading at. By the time you're showing later stage A or growth investors, you're really showing the business, and the team is obviously still quite important, but I think it typically tends to go after several company-based slides.
Mhm.
That said, I think it's important to establish what your company does before you, in many cases, before you get to why you're the right people to build it, because ideally it should link together well. And the team slide should not just be a bunch of random logos of where you've been, but it should also help to tell the story about how you came to this idea and why you and the team you've assembled are the best people to be working on this and the best people to be working together.
Mhm.
In terms of market size, I don't know. Like the slide, everyone has the slide that has like 3 circles. I think the honest thing is most investors are recalculating what they think the market size is anyway. So frankly, I don't know that I have a really strong opinion on how it's presented in a fundraising deck, but I think a good rule of thumb to think about for a founder raising venture money is to run through the exercise of, if you're telling the story about reaching 10 or 50 or $100 million of annual revenue, what portion of your actual market size are you thus assuming that you're capturing? Because the vast majority of companies will never achieve a huge chunk of market share, which is okay. And I think in many cases, founders don't realize that they are perhaps like resulting in a higher percentage of the market than they actually intend to.
For sure. I wonder, so how do you think about like what kind of traction does a seed company should have? Because in Silicon Valley, obviously I feel like a lot of the company would just like, raising like valued at like maybe 100 million at like a pre-seed stage. But versus like, if you're doing like a popcorn company, that's like probably very different. I guess like what would you say would be the benchmark for seed stage should kind of like look like, and then what should be even included in their data room if they didn't really have much traction, or they're building something, they're still trying to figure out the product basically.
Yeah, you might hate this answer, Grace, but
It's all
I
done.
really am not going to give a specific benchmark because it just really depends on the business and the team and what they're looking for from a financing perspective. And in general, we at Serena Ventures say that we like to see some revenue traction, several $100,000 of high quality recurring revenue. But that said, that's not always the case for the seed investments that we look at. So I know it's a really unsatisfying answer, but I think it's just the truth. Some investors, I think, do a better job of clearly saying on their website, we need to see $1 million of ARR, or we need to see, XYZ months of progress so we can run our cohort analysis on. Like, people have different approaches to it, but I think the reality is, particularly at the seed, it's a little bit murky. Unfortunately, I think it's also murky at the A, although I think at that point, for most, although not all companies raising a big slug of capital at the A, you really do need to see several quarters of high quality, referenceable, repeatable revenue, whether it's B2B, B2C, marketplace, products, B2B2C, et cetera. In terms of data room, at the seed stage, I think even if the business is pre-launch, and especially if it's not, I personally like to see a forecast. And of course, it does not need to be a 3-statement model, like that's all the time. But I think the exercise that's helpful, even at the seed stage, is just really understanding how things flow through the business. So what are your assumptions and what are the different components driving your revenue growth? What are the different levers that can be adjusted over time that affect your margin? What does your team and OpEx look like? And at the end of the day, what does that mean about if you're raising a $5 million seed? Where do you think you're going to be at the point where you have 6 months of cash left and need to go raise your next round? Obviously, all of that will likely change, but I think it's a really important exercise in most cases to do. Other
Mm,
than that, I think depends on the business, of course, but product demo or customer contracts, if that's relevant, team bios, cap
mhm,
table, any outstanding notes, etc. Any market research or competitive research or anything that is specifically relevant to your industry or what you're building that is proprietary and makes sense to include. Product roadmaps are really helpful. I think that's probably the big ones.
mhm. I wonder, so what do you suggest founders to do when, let's say, like they're trying to pitch you? They're another popcorn company. I feel like since we talk about popcorn, I couldn't stop thinking about popcorn. But let's say they're like another protein company or another popcorn company, and they're also trying to pitch you. So like, but you already invest in something in that sector. How do you think about like the competitiveness of like pitching an investor? Who are focusing on the industry. Obviously, like on one end, like, they already invest in this sector, so they believe in this sector somewhat. And then like, but on the other hand, they potentially invest in like a competitive company. If you're the founder of a company, how would you kind of go about pitching a specific investor in like that direction?
Yeah, so I think you pointed out a good nuance, which is understanding if your business is directly competitive to a portfolio company or more interestingly is an example of a
Mhm,
thematic area that a
mhm,
firm is really excited about. So most investors will not take meetings with companies that they perceive as being directly competitive with their
mhm,
portfolio companies. I would go as far as to say, like,
mhm,
none of them should be, and some
mhm,
people do, but um, I think the best rule of thumb is to ask existing portfolio companies if they think a prospective investment is competitive
mhm,
before meeting them, because it's just the best way of making sure that you're not running into trouble from an investor perspective. But also founders should definitely feel compelled to say the same thing. If you are a founder and you receive an email from an investor and you notice on their website that they're invested in a competitor, like you should definitely point that
Fine.
out it turns out the meeting, right? I think what is more interesting is if you can say, oh, I know that you're interested in the general payment space because of your investment in XYZ. I'm building a payments company, but for a different geography or a different market, or I'm in a different part of the stack, or I'm actually infrastructure powering that. They could be a potential customer, or we're already thinking about partnering, and here's why it makes sense for you to look at us too.
Mhm.
Something like that is, of course, really interesting and does not run afoul of any potential directly competitive issues.
For sure. I wonder, do you think like they should, so obviously I think having a warm intro is the most ideal situation. So as an investor, how do you value the warm intro? Like should it be coming from a portfolio company that's like tier one, maybe another investor tier two, and then maybe I guess cold email it's tier three. But like what if this person is living in an area that doesn't expose them to a lot of investors and they just send in like a cold DM? Like how do you kind of evaluate that kind of um, you know, inbound request? And then I guess like for the people, obviously a lot of people always say like, oh, if you can't network my way with a warm intro, that means like you can't really, sell XYZ product. But I think it may not be applicable for the founders that are. I'm just thinking, I have a specific example. Like, so for example, I feel like the Slice founder in New York City, it's like a very popular example of like this person does not look like, anyone who would create like amazing tech company. Obviously, he did, which is like he created like the pizza delivering app. Then he worked at a pizza restaurant for many years, or like his family owned pizza restaurant for many years. So basically, I feel like those kind of stories, like I don't know how he networked his way into an investor, but I just feel like for a founder who may not be with a lot of like tech connections, like how should they like spend the time to network with the portfolio company to get a warm intro, or should they just straight up DM? Um, and do they send a deck first, or do they ask for a meeting first?
Yeah, so this is a great question. Unfortunately, I think this is something else that comes down to personal preference.
Mhm,
And I I think you're exactly right. I think the vast majority of very smart people don't happen to be automatically connected into the venture capital or early stage venture backed company ecosystem without some, like everyone needs to start somewhere. So I would say insofar as you're able to leverage any connection to a prior coworker or a friend of a friend who's an investor, anything like that is a good place to start. But I would say it's certainly not strictly necessary. I think in terms of cold outreach to either an investor or a venture-backed company, I mean, I tend to read most things I get. I don't always do it immediately. I think some people don't read anything that comes into them cold. But I would also think carefully about whether that is your best option or whether the time spent actually building your network or attending events or figuring out interesting ways to partner with people might yield better results. But in the absence of that, I think sending a cold note happens often. And you have to think about how you're standing out from other emails or LinkedIn messages or forwarded chains people are getting. I think it's always really helpful to pretty succinctly explain who you are, what you're building, and what you've accomplished. You know, there's examples. There's one example from Greycroft's portfolio, which is one of that firm's highest valued companies in its specific fund now. It did originate with a cold message where the founder was just so clearly a very accomplished person who didn't happen to have a VC network. But from the first message, it was very clear that that person was very accomplished in their field and had already accomplished a lot in terms of their business. So I think in terms of sending a deck or not, I think a short deck is helpful. Some people won't click into a deck until they think that the body of the email is interesting. So I would say the body of the email is certainly more important. I wouldn't say that asking for a meeting is necessarily going to bear fruit. I guess it doesn't hurt, but I think it's unlikely that someone will agree to a 30 or 45-minute meeting without themselves deciding, okay, I've reviewed this email and reviewed this deck, and now I am ready to ask for a meeting.
For sure.
The last thing I'll say is there's, as you know, like a robust ecosystem of YC, other accelerators. There's like various AI focused accelerators now. Several universities have programs. I think there's a lot of ways where folks can make those first few warm touch points, and then it's really exponential from there. So I think that's certainly something I would recommend to folks.
Let's say if you pass on a company, but like, the founder asks you to introduce them to other investors, like how do you think about the intro? Or like, I guess like since you already passed on that, like if you introduce to other investors, like would that still make sense to them? Or, how do you suggest founders to go about it? Should I ask the investor who reject us to like keep intro us?
Yeah, I think it only makes sense when speaking from a founder perspective, when you've met with an investor and there's some reason why you're not a fit for their specific fund. So for example, recently I met with a really interesting woman building something in deep tech and cybersecurity. And frankly, that's just not an area where we've spent a lot of time. And so it was very clear to other folks when I asked 3 of my friends who specifically focus on that category if they were interested in introduction. I was able to just say to them, and by the way, they already knew, I was able to say to them, this isn't an area I focus on, but I like conceptually really enjoyed the meeting and I can follow it. I can follow enough of it to think it's interesting. I just don't have the extra 10% of specific perspective on how this stacks up to like the other competitors that I'm aware of. So I think in a case like that, it's pretty clear. In a case where it isn't clear is if you're not really sure why someone has passed on your company, or maybe they've expressed that they don't believe in the business model, or they
Mhm.
don't believe in whatever like
Mhm.
fundamental aspect of the
Mhm.
business, you probably don't want that person to introduce you to peers and then like be forced to relay that information when someone asks why they didn't make the investment. Um,
Mm.
I think also something I've seen occasionally is founders sending a cold email asking
Mhm.
for a meeting, and then if
Mhm.
they get a no, then they say, "Well, can you send this to other people?" And I totally understand the desire to do that,
Mhm.
but again, it's really difficult if the meeting if there hasn't been a meeting or there's no prior touch point. It's just difficult because uh, then it's like, what am I recommending? I don't even know
Mhm.
anything about this, right? So I think that's pretty tough for folks to forward along.
Mm. I wonder, so like, since you mentioned about like the deep tech cyber related area, so I feel like nowadays a lot of people are regaining focus in robotics or manufacture. What's your thought on these kind of space? And since I feel like you guys have a very broad mandate, like on like, what to invest in, and like, would you um spend time and energy into these like deep tech cyber slash robotics, or how do you think about those sectors?
I think there's so many really interesting teams building in those
Mhm.
spaces right now, perhaps more so than
Mhm.
in the recent past for a bunch of really good reasons. I think I would certainly, never say never, but
Mhm.
the areas that we focus on and the companies we spend time with, we really want to make sure we're the best possible investor for them. Meaning, um, are we experts at a space? Can
Mhm.
we help build strategy? Do we have networks for business development, recruiting,
Mhm.
potential partners, potential exit opportunities, et cetera? And
Mhm.
so I think it's not something that we want to casually dabble in. That said,
Mhm.
we still are meeting many businesses in
Mhm.
those categories that you mentioned, and we're definitely continuing to build our expertise
Mhm.
in those industries.
Mm. I wonder, since like, I guess like what is the future of Serena Ventures? And then do you have to like, since you are a partner there, like do you have to fundraise, or like does it all comes down to maybe, I guess like Serena to fundraise? But I wonder like how does it kind of like work when, you're working with a super like strong like public persona to like build a fund together?
Yeah, so it's a great question. Of course, Serena has an amazing network
Mhm.
for fundraising, but really, everyone on our team, myself,
Mhm.
my partner, Serena's chief of staff, my colleague who's our operations manager, really everyone is quite involved in um, LP meetings, LP
Mhm.
relationships, and eventually thinking about fundraising
Mhm.
for the future. So I think the great part of being a small and entrepreneurial and hands-on team is really everyone brings to bear a different network and a different
Mhm.
skill set, but we're small enough that we're able to work really closely together on figuring out different pieces of the puzzle
Mhm.
that goes into fundraising.
Wait, how did you get connected to Serena in the first place?
Yeah, so I was connected to Serena Ventures through a friend who had worked very closely with my colleague, and from there we continued to spend a lot of time together, and I had several meetings with each member of the team.
Mm. What is your vision of Serena Ventures? Just because I think, obviously I feel like we only see mostly celebrity led companies, because I've just seen like Road got acquired by Elf and stuff like that. But like also like, there's a few celebrities that have been running their own funds, like Ashton Kutcher or like the Chainsmokers fund. And like how do you think about like the celebrity build fund in general, and what is the direction that you are trying to build the fund into? Obviously there is the ACNZ version of it, which is like build a really big team and big fund, and then there's also like the boutique style. What's your vision for the fund in general?
Yeah, I think we just really want to continue to be known for our amazing investments
Mhm.
in those categories that make sense for us based on Serena and her personal network and her personal
Mhm.
brand, but also
Mhm.
the different areas of expertise that each team member brings to bear and our individual investment track record. And I think I would love for us to be known as across any category, just a very high performing fund. But then, of course, we are in our own category being led by someone who really is second to none in terms of her influence and reach and accomplishments, both what she's well known as for an athlete, but also as an entrepreneur and operator herself. So I think we have a really big mandate, and I think we're all very excited to continue to grow in some respect, but really stay close to that mission of ultimately continuing to invest in the best businesses, and really it's as simple as that for us.
How do you, I guess, like what's your day to day like managing the existing portfolio companies? Because when I open your website, there's like I want to say it's hundreds, but like there's tons of like logos, right? So if each company send you like a monthly investment updates, like that's a lot. Like how do you kind of quickly filter out the stuff that are, need help with, or priority number one, and how do you kind of like actively manage all the portfolio?
Yeah, so one nuance is that I think on our website, we list both our Serena Fund 1 investments as well as Serena Williams personal angel investments, which really Serena Ventures, our institutional $111 million Fund 1, grew out of her personal angel investment portfolio. But the portfolio that we're actively managing is the Serena Ventures fund portfolio.
I wonder, so like, yeah, even just like the Fund 1 portfolio, that's a lot too. I guess like how do you kind of like manage your time on like, which one to emphasize more, or I want to say emphasize more, but like need help with more, or like, if like a portfolio company wind down, like how do you kind of like deal with these kind of like situation, and like how do you like actively track each company? Because I feel like every day there's a lot happening. You have to meet the new company, you have to meet the LPs, you have to go on investment meetings. I guess like how do you kind of like manage the portfolio companies?
Yeah, I think this is definitely there's definitely an opportunity to have a better system, but at a high level, I would say that it really just comes down to understanding what's happening with each company each week, and then discussing as a team who has the best expertise, right? So if there's a company that is raising a subsequent round, we have a ton of experience with that. If a company is deciding between two potential acquisition offers, like, who can we pull in, who has the best experience in talking through that? But I think ultimately what I've seen work the best across my career is really just building trusted and transparent relationships with founding teams, so that hopefully there's never a surprise, but rather investors are generally aware of what's going on in businesses way more frequently than just a quarterly board meeting. And then from the position of an investment team can understand what's likely coming down the pipeline in terms of needs from a portfolio company.
Totally. Okay. So maybe last, I want to be mindful of the time. Maybe last one minute real question, and then 30 minutes fire run. One real question is like, how is the investment decision being made? So like, do you and your whole team sit together every week to go through every single deal, or like, everybody have to agree to move forward, or how does it kind of work?
Yeah, so we don't discuss every company, but we definitely discuss in depth many of the companies that we meet, and all of the ones that people are really, really excited about. It tends to take us several weeks of diligence and meetings and negotiation. And I would say we definitely tend to be more of a consensus-based group when it comes to making decisions. Again, because of our size, I think that's relatively easier than perhaps at some other firms.
Okay, one minute fire round. What's your favorite book?
My favorite book is Tomorrow and Tomorrow and Tomorrow.
Love the name. What is it about?
It's about a couple. Oh wait, did I get the book wrong? The name of the book wrong? No, I did. It's Three Tomorrows. It's about a couple that meet when they're very young and they continue to grow throughout college and through their careers in technology and actually video games. And it's a really interesting coming of age story that intersects with technology and personal growth.
Love. Who made the biggest impact in your career?
I would probably say Alan Patricoff, who was the founder of Greycroft. Before that, he was the founder of Apex Partners and is someone who I worked directly for in my first several years at Greycroft and still really run major decisions by him and minor decisions. All by him.
Who would you invite to your dinner party?
To a dinner party, I would invite all of my friends and my favorite celebrities, John Hamm and and John Mulaney.
Oh, love. Okay, so where can we find you outside work?
I love to just walk around the city, particularly on days in Manhattan that look nice like today. I think it's just so much fun to wander around without a plan.
Amazing. Well, Sharla, thank you so much for coming to the show today. It was such a fun conversation.
Thank you, Grace. Have a good one.
Thank you.